So what's up, everybody? Let me know in the chat if you can hear me okay. Let me know if you can hear me okay. I'm trying a couple new things tonight. It's been a long time since I had the live stream go to YouTube. So if there's anyone who can go over to YouTube and see if it's coming through okay. I see there's like a 25-second lag from here to YouTube. Unless you guys can hear me okay. It's been a long time since we did a Friday night Forex and chill. You can hear me on YouTube. Good stuff, good stuff. Um, I'm not seeing the chat pulled up on YouTube yet. So if anybody sees any questions in the chat, you can just pop them over here for me. Chelsea, let me make you co-host as well. Thank you guys and ladies for all joining me on Friday night. Chat keeps moving. I keep trying to find you and it moves us. All right, let's go. Chelsea, I have made you a co-host. So before we get started, let me pull up this handy dandy risk disclaimer so I don't get in trouble with the federal government, some of our best friends, right? So risk disclaimer, trading involves risk. Never risk more money than you can afford to lose. I am not a licensed professional financial advisor. I am, however, Forex and Chill, and I am the signal. We're going to discuss tonight how I look at the Forex market and answer questions and hopefully give you all some information that will be very helpful to you guys. Yes. Okay, so YouTube is slightly delayed. All right, the next time I might just go live on YouTube and not do a Zoom at all. It might have been easier, but it's been a while. I have to test it out. All right, so one thing I've noticed, and I'm going to cover a few things tonight, take some Q&A, answer some questions. I see people still coming in. How many of you were here in the beginning when we started Forex and Chill, and we used to get on Friday nights at like 9 o'clock and stay on here till 2 or 3 o'clock in the morning? Don't get scared. We're not going to do that tonight. But yeah, Rebecca, I remember you always being on here. I've had a pleasure of meeting Becca in person. Nicole, she's from back in the day. Hopefully meet you soon. We got some more people still coming in. So we're going to wait about 2 minutes before we get started. So let me know where you are all joining in from tonight. Let me know where you are joining in from. So Forex and Chill, what's up, Tanya? Forex and Chill started with like 2 or 3 people on a Friday night, and it grew to some of our sessions, a couple hundred people jumping on. So, and we did that like for 2 years straight. What's up, Miccosukee Tribe out in Florida? Glenn, good to see you on here tonight. Let's see who we got. We got New York, Michigan, Vancouver, Canada, California in the house. New York, what's good? Omar and McNair, Central Ohio, Miccosukee Tribe in Florida. What's up, Lynn Grace? Tanya, we got Greenville, South Carolina. You're right close to me. We're practically neighbors. Toledo, Ohio. If y'all don't know what the Ville is, that's Fayetteville, North Carolina, over at Fort Bragg, Compton, CA in the house. What's up, Yolanda? What's up, Brooklyn in the house? Good to see all of y'all here tonight. So I don't want to take up too much of your Saturday night. I haven't been able to Netflix and chill myself in a couple months. So we're going to get us some chart time, answer some questions, and then I'll get some Netflix and chill time. What's up, Santa Barbara, California? Stephanie Hall, I haven't seen you since the last time you came to Myrtle Beach, I don't think. So we are in discussions about doing a live trading retreat, maybe one in a few months. Yeah, it is Friday night. It's Friday night Forex and chill, but after that, it's going to be Netflix and chill. So we're discussing doing a couple of retreats, maybe do one every couple of months. Love you too, Stephanie. It was definitely fun meeting you and hanging out with you. So we're talking about doing one here in Myrtle Beach, one in Atlanta. I want to go to Puerto Rico or somewhere in the islands. So if you guys wanted to come to like a live 3-4 day trading retreat, I'm not talking about any kind of marketing. I'm not talking about trying to sell you anything. I'm talking about hardcore studying and trading. Jamaica. Oh, I would definitely go to Jamaica. I had some good oxtail this week and maybe some cornmeal porridge as well. I'll come to Jamaica just for the food. So that's something we're talking about. Also, if y'all were out at the FX Summit in Miami this week, please note that there are tickets already on sale for the event next year in Dubai. So the tickets are already on sale for next year in Dubai. The date has not been announced yet. They said it's going to be later in the fall, like maybe October or November when it's cooler. It doesn't get cool, but it'll get cooler, like 70 degrees Fahrenheit for us. You don't want to go this time of year. Someone was saying, oh my God, that's so far away. And I'm like, dude, you do not want to be in Dubai in June or July. You do not. Take it from me. All right, so tonight we're going to discuss finding key levels, because a lot of times people get into the market and they get in at the wrong place, or maybe they get in the trade and they end their trade too soon because they don't trust the market to go where the market is going to go. Now, when it comes to me, I still love to trade market structure, and I still love to trade smart money. And recently I've been adding a lot more of supply and demand, because honestly, everything in life that you buy and sell is the price is based on supply and demand. And that goes with these currencies. If a currency is undervalued, investors are going to buy it. If it's overvalued, they're going to sell it. So the market structure piece of Forex is going to tell you, what is the market doing? Market structure, so add that to your notes. Market structure is going to tell you, what is the market doing? Okay. And it's going to tell you on the higher time frames what the market is doing, because IT traders, institutional traders, the hedge funds, the big money in the market, they trade on the higher time frames because they're not trading the way that we trade. They're investors. They're not sitting here on MT4 buying and selling Euro USD. They're either buying Euro futures or selling dollar futures or buying Great British Pound futures. And so that's why every week I look at the futures of each currency independently. Like I'll look at the yen. So if you see that all the JPY pairs have been flying up, if you look at the yen, then you would understand why they've been in long-term buys. And these are things that you as a trader, if you're going to be an independent trader taking your own trades one day, you need to look at things like the yen. This is the yen futures. The yen futures have been on a big decline, okay? Once they broke, boom, and they were coming up correctively. See, they had sold here, pulled back to this supply area. Then they were consolidating. Then you had the next breakout and boom, they melted down. So this is why everything yen, even though we've had some small pullbacks, those pairs have been shooting way up, and people have been getting their heads busted because they're just selling because it comes to a key zone, or they're not looking over here at the yen futures at what's going on economically for the Japanese yen. So you have to tie in some fundamentals and some economics in your trading as well. Now, can you be successful without doing all this other stuff? Yes, but if you're going to be a serious trader long term, you want to have an edge in the market. You want to know these extra things. I love being a Forex nerd. Okay. I love being a Forex nerd. I need to get me a shirt that says that. Because I'm going to always study. To be the best at something, you have to continuously study. Like I was speaking with someone yesterday. Michael Jordan didn't shoot basketball once a week or twice a week to become one of the best in the game. He had to be on that court, actively shooting hoops and doing layups and handling that ball every single day. So if you're going to be serious about Forex, you can't chart once or twice a week. You really can't. Not in the beginning, not the first few years. Now, when you become advanced, you're already making 6 and 7 figures consistently. You can spend a lot less time on the charts, a lot less time in the market. But when you're trying to become an expert or a master of the markets, you got to get in some chart time. With that being said, let's start doing some top-down analysis. So I was sitting here earlier And I was like, how can I help people identify their key zones, their key levels? Okay. So I know a lot of people are like, don't mark on my screen, but we're going to let you guys mark on the screen tonight. We're going to play markup. And if there's anybody watching YouTube that wants to join via the Zoom, it's forexandchill.com will bring you straight into the Zoom. If you're on YouTube and you want to join via the Zoom so you can participate, it's forexandchill.com. Okay. So just anybody that feels like it, mark some key zones or what you would consider a key level where you would be looking for a reaction in the market. A reaction could be you would expect it to sell or to just reject a little bit or reverse or to buy up. Mark some key zones on the chart where you would be expecting reactions in the market. Don't everybody mark at once. You use the annotation. Okay, Cody and Jackie marked up. Anybody else want to mark some key levels? Okay, so, and these levels are easy to spot because they've already played out. So they're easy to spot because they've already played out. But what you want to get good at is identifying these key levels before they happen. These key levels are very important because it's where the big money, we're on the higher time frame. If you look at the chart, we are on the weekly. I see some people coming on I hadn't talked to in a while. What's good, Ike? I don't know if you guys remember him. He traded with Terrell. He was the young guy out in Africa. It was like 14 and killing the market. I think he's probably 16 or 17 now. I haven't talked to him in a few years because it's been a while since we did the Forex and Chill. Nice to see you on here tonight. We always had a lot of people from Africa join these sessions from Forex and Chill. We had one guy, it would be like 3 o'clock in the morning and the roosters would start crowing over there. Those were the good times. But again, you want to mark these key levels before they happen so you will know where to expect price to react. What we just did right here where you guys marked on the charts, it's all hindsight, so it's easy to see. So if we had cut off all this price action, you wouldn't have seen any of that. So to get your eyes trained, what you want to do is start cutting the market off, you know, and you want to forward test. When I first started trading, I did a lot of back testing where I would just use the replay button and cut off the market and look for key reactions. Okay. When you cut off the market and use the replay, that's called back testing. When you mark it up and see how it's going to react in the future, that is called forward testing. So now looking at this, where would you expect a reaction in the market? Looking at the current chart now that I cut off price action, where would you expect a reaction in the market? All right, so we've got a zone there. Let's mark it. I'm going to mark what you guys mark. And it's like I tell people, when I work with people one-on-one, I don't chart, I make them chart. Every mentor I've ever had, they would chart in front of me to try and teach me how to trade. But I'm like, is that really doing me any good? So when I work with people one-on-one, I make them chart in front of me so I can see what they see, what they might be missing, and what I can do to make them better. So here we have an area that caused a huge sell on US 30. Okay. This was driven by fundamentals and economics. Does anybody remember what happened in February of 2020? And in fact, let me make it where you guys can unmute because I like for y'all to be able to talk to me. You're able to unmute. Anybody remember February 2020? What happened?
COVID.
Yes, COVID. So the market needs a pandemic or something else to happen to be able to sell off, to give a correction. Market sells off a lot anyway, but to get a big correction in the market, we had fundamentals came in here. So this was economically driven. So even though we can anticipate some type of reaction here, we need to keep in mind that this wasn't just a regular sell-off. This was driven by economics and fundamentals. The people who had invested here and made money pushing it up, who had probably made millions of dollars or maybe even billions, because this is a 7.7 trillion million a day market. They made so much money shorting this market. The same ones who made the money selling it off using the pandemic as a reason to short the market, they're the ones who came in here and bought it back up. So they made money both ways. So if this were just a typical reaction to price and go back up, I would expect a big reaction here. But keep in mind, this was economically driven. This was fundamentally driven. So it's not going to be as strong of resistance as any other market structure. Also, we're looking at US 30. US 30 is based on stocks, and it's not traded the same as Forex. Okay. It's driven by how the economy is performing and what the top 30 stocks in the US are doing. So now we have a healthy economy again, because after the COVID pullback, we started getting back on our feet. They had started pumping the stimulus money into the market. Again, that's why it pays to know some of these fundamentals. So where normally, if this had been like Euro USD, and we would have been back into overbought territory, we could have been looking for a strong reaction. Now, you will get a reaction. Let's see how strong it is, though. Right? We got a reaction. So people are shorting the market. Now, if you were looking to short the market, where would you identify a key level that you might want to take profits on your shorts and look for the market to start going back up? Okay, let's mark these zones you guys have marked. Go like right here. And like right here. All right. Let's see if you guys are right this time. And we're going to get into some more stuff. This isn't the only thing we're going to do tonight. Boom. All right, y'all hit it. Okay. Now, what do y'all think the market is going to do from here? Just looking at the charts, what would you expect to happen here? Jamal's expecting it to break through this zone, retest. Looks like Andrew is expecting the same thing. Someone's expecting a retest here and to continue selling off. So let's see what we get. Okay, we're at that zone. Right, now we have breached it. Okay. This right here gave this huge sell-off. Okay. Smart money, big money came back in, and they formed a level of support here. So now the market consolidated between these two. Okay. Once it rejected here and failed to break, this is when you should have started looking for your longs. Okay. So one thing we teach on the academy is everybody, and I know it's helped Holly a lot. Again, I'll shout out Holly. She's been on multiple leaderboards with the prop firms. She's been in several of the challenges, and out of 10,000 traders, she always comes in like top 5, top 10. And she's using what she's learning here at the academy, but recently she's been looking at candle closures and the line chart and the dynamic support and resistance. Okay. So we need to pay attention to how candles close. Like y'all see that a lot of the trades that we catch in the signals are based on candle closures. Okay, when this candle here closed, I would have, let me turn this stuff off. I can't clear because I got some stuff under here. I hid on the chart that I'm gonna cover with y'all later. We're on the weekly, okay? So when this weekly closed,
Hey, Gigi,
yes.
did you want to record this?
Oh my God.
I just
You
realized.
oh my God. Well, you know what? It's recording to YouTube.
Okay, perfect.
So, yeah, y'all know I'm old these days, so you're gonna have to remind me early on. All right. So I think we can download it from YouTube. If not,
I believe
everybody
so
can
as
watch it
well.
on YouTube.
Yep.
All right. So one thing we've been teaching on the Academy that is extremely important is how did the candle close? Okay. So this candle here, if we bring it back this way, based on what we've been learning on the Academy on the last few sessions, what about this would have made me suspect that price was going to continue to go up? Okay, we're looking at the black. Let me move this back. Let me do this. Okay. When this black candle closed that week, okay, what about this would have made me think that this market is going to go back up? There was a wick rejection, but we look at the close. Okay, we need to focus on the way it closed. If you look here, it failed to
below.
Yep, it did not close below. Okay, this did not close below. So this is like a base candle in supply and demand. And this base candle, what was this responsible for? What did this candle produce?
Structure.
Yes, it broke structure. So this money right here, this is where they came in the market and they created this break of structure. So this is a very strong zone. It's a very strong zone. They failed to break it and they closed above it. Okay. It looks like the YouTube is recycling or something like that. Hopefully it's picking up okay. So whenever you see price, a zone or a candle that is responsible for breaking structure, especially on a higher time frame. This was a higher time frame break of structure. It caused a huge break. This was the first retest, and then price went up from there. So make sure you're paying attention to how candles close. Could someone check and make sure that the YouTube is still going okay? Another thing I look at, I always look at the line charts now. This is another thing that has helped me identify key structure as looking at a line chart. When you have a sharp V, actually an A and a sharp V. So like if you have a sharp A and a sharp V, well, I'll tell you this lemonade. It's not spiked, y'all, I promise. Drinking my strawberry lemonade. These are areas of, these are like strong areas. So if you were able to breach this, this is an extremely strong area. That means you had a lot of money come into the market to breach it. So now you see here where this A is, that's that money that took out this. Okay, so that's why I consider this a strong level of support. Okay. To the candles, and I'm going to start showing you guys a few things in a second, but I want to finish this out. All right. So another thing, every day I look at how a candle closes on the daily to determine how I think that market is going to trade the next day. If y'all go back and look at the gold today, y'all saw those red lines that we had on the chart and how those lines got respected. The sell happened from the top red line and the buy happened from the bottom red line. And it was based on daily closes, daily highs, daily lows, opens and closes, okay? Because the full body candle is the actual big money players. The wicks, a lot of that is the manipulation, the smart money, the liquidity grabs, but how it closes and how it opens, that's your real money in the market, okay? And this day, this was that day, that last day of that wick. The reason it's a big wick on the weekly is because on the last day, it bought up. And again, you'll notice here, it held. It did not close below. So if I'm expecting a bullish market and I see a close above, that gives me just more confluence or more confirmation that I think that market is going to go bullish the next day. And boom, bullish it went. All right. And then I start looking each day as to how did this market close? And I know we did this exercise a few weeks ago on the Academy, but here we had a strong close. Okay. Closed above again. I'm expecting another bullish day. But typically when you have 3 or 4 good bullish days, you're going to get some pullback. Maybe there was some news. If there was news on this day, I would start looking for liquidity inside of the body of this candle for them to come grab on a lower time frame. Okay. So we start looking again, where does structure break? All right, right here. Right in here. If you can't see it, you switch to your line chart. This right here broke. But when you see these right here, these are like order blocks. Okay, when you see these on the line chart, if they're not a sharp A or a sharp B, but they're going sideways like this, these are like order blocks or base candles in the market, and they act as liquidity. Okay. I can get my annotation off here. So I would focus on liquidity being grabbed here. Like if there were news or like the New York Open when they need to come down and sweep liquidity, I focus on these zones. Okay, switch that over to my candles and boom, we had a base candle in there. So you see a rally, base, rally. So this candle right here is what caused that little kink in the market. Okay. So when they sold off, they were just coming to grab liquidity. Okay. Why is this important? So why is there money here? Why did they want to mitigate this? Well, it took out opposing liquidity here, here. Actually took out this zone and this zone to create this higher high. They came back and retested it. Look, closed above. Again, we have another close above. And again, we have another rally. So those are some of the things that I look at when I'm trying to determine what the market is going to do the next day. And typically when you get a break, a structure, and you take out opposing liquidity, you're going to get a retest. Another thing, when we talk about candle closes, if you look right here, right, do y'all remember what this is called from our supply and demand boot camp that we did? What kind of zone is this? All right, we just took this out. A lot of traders would have been sitting here waiting to sell, because looking at overall structure and price action, everybody's, oh, it sold the last time it was here, but it came through it. Now it closed above. That's why I'm looking to go long. All right, so what do we call this zone? Does anybody remember?
Flip zone.
Yes, it flipped, okay? And its resistance became support. And the smart money terms, ICT calls it like a breaker block. So right here. What's important to me, again, is how did the market close every single day? And we saw this a few months ago when I was calling buys on US 30 and everybody was calling sells. And each day they were getting caught up. They would take these sells and it would bounce down. Come on, work with me, mouse. It was bouncing down. People were selling. It was bouncing down. People were selling. But remember, we were in an accumulation of buys. And I was like, hold your buys because it's going to break out. Y'all remember that? Okay. That's why. because it broke above this, and each day it was closing above. Now, had it closed below, I would have been looking for sales. All right, this right here, this was news, came to mitigate this that had taken out this and this. So you have to look at all these things in the market and ask yourself, if I were moving the market and I need to buy, I got to trap sellers. Okay. So they're going to trap sellers here. But then they aggressively push back up. They have to take your money to make money. So let's take this off. And it's a daily cycle that repeats itself. And you have to look, because this happens on the weekly, monthly, and daily. And that's what I look at as far as directional bias. When y'all on the weekly outlook, y'all know most of the time my daily bias and my directional bias plays out. And those are the kind of things that you need to look at. How did this candle close? Where am I in relation to overall price on the higher time frame? If it swooped down to sell for the day, was it really a break of structure, or was it a wick for a liquidity grab? I only count it a break of structure if I have a body close. Some people count a wick as a break of structure. I do not. If I don't have a body close, I'm not convinced. Okay, so let's let this finish playing out. And I'm gonna unhide a few things. All right, let me just stop this. I can't see it because the Zoom is hiding it. Here we go. All right, so I'm gonna show you guys a couple other ways that I find key levels, and then we'll do like some top-down analysis. Because like I said, a lot of people get in trades and they don't hold them. And I like to swing trade. So where did you go? We're gonna do like this. All right, so this is what I call the dynamic support and resistance. Can anybody tell me why I would have drawn this trend line to look for a sell off of here? And this is on the daily. You can unmute or you can mark on the screen. What are those?
Points of resistance. And
Is
then,
it resistance?
I mean, support, I'm sorry, support, then breakthrough.
So you had
retest.
support,
Yep.
support. So it's not a trend line to give us the trend. We're not looking for the trend. We know the trend. The market is making a higher high, higher low, a higher high, failed to make, I mean, this was not a higher low because it failed to make a higher high. Let me do that again and get my line straight here. Y'all, y'all know how I'm when I'm drinking my strawberry lemonade. Okay, this caused the break of structure and made a higher high. So this would qualify as a higher low. This is not a higher low. Why not?
Because there's no higher high.
There's no
There's
higher
no
high.
structure.
Exactly. This is not a higher low. It did not break structure. So what is price doing? What is this called when price is doing this? There's a term for it. Compression. Yes, Deshaun's right. Compression. Right. So the market is compressing. So I'm waiting to see. Let me take these off here real quick. I'm waiting to see when it's going to stop compressing and give me that break. Right. So the best way to see this, once again, and let me make it big for y'all, is to flip to your line chart. I have this V and I have this V. So I would have drawn this initially, a V and a V. So we have support, 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 and this broke. Once this broke, we're out of compression because now this has broken, okay? So how do I identify where I anticipate the market to come? Okay, switch back to my line chart. I mean, my candles. Let's take this to this wick here. And boom, you can show rejection because now we're out of compression. Okay, the compression is over. You had a break of structure and a retest. You could look to go short, and this is on the daily. Right here. This went 19,000 pips because it was a daily move. Okay. So let's do this. See how we could have caught this trade. I'm going to switch over to my line chart. And I'm just going to mark some spots here. Here is a zone here. We had multiple touches. We had support, resistance, support. It broke and it came back up. And look at that. And I promise y'all that I just made these lines on here tonight. I didn't have this pre-planned, so I'm looking at this with fresh eyes. I didn't even do this when it happened because I wasn't even trading this, I don't think, back then. Not this style. This is, y'all know, this is some of the new stuff I'm teaching. But you see here where you had support that became resistance, and then you had this zone that, according to your line chart, there's a lot of big money here. We got a V, and it broke it. We had a V, an A, and a V. It broke it, and now it came back up to it. Okay. Here, what did I tell you these were earlier? These right here. These little small ones.
Order blocks.
Right. And this is an order block that got broken. So it is what? It's a breaker block now. So, boom. There you go. There's your trade. Makes sense to everybody?
Yeah.
Right. So
Yes.
I've been working with someone one-on-one, and I introduced him to this into the line chart, and he's been catching trades like crazy. All right, so we did that one. So let's look at this one. Okay. So how did I determine this right here? You're going to have to start thinking and looking at the market differently to see this stuff. How did I determine that?
There has been a retest. It broke
Okay.
through, but there's no retest yet. That's an order block, correct?
Yeah. This was an order block that became a breaker block. Can you see it? It was an order block. So when price hit it, it bounced up. When it came back, it broke through it. So it became a breaker block. So it became a key level because price sold here. It was support and it was resistance. Now, when price broke it and closed above it, we got the retest and it acted as support. You see that? And also, see how many of y'all remember this? Right here where we have these candle overlaps. What do we have under there?
Order block on the lower side. Base.
Yep. It's a hidden base, and there's usually order blocks, liquidity, fair value gaps, things like that when you have the overlaps in the wick to each side. Okay. So see what happens here. Boom. Wow. To the pip. Y'all see that? So if you can't see it here, switch over to your line chart, and you see that sharp right there that we talked about. That is that base candle. Right there. Let's pull it down a little bit. Okay. We got it on there. That's that base candle. Switch it back over. The reason I moved it up was because of where the overlap was there, and to the wick of that candle lined up perfectly. You have the wick here, the overlap here, and price hit it and gave us the reaction. Okay. These are very key levels. And this is how I've been identifying a lot of my key levels. This line chart and oh, it means to delete it. Let me hide it again. And the zones like this, the A's and the B's. Here, I marked that as well. Had marked that same zone. Here. Of course, we know why that one's there. Let's see what else we got. All right, does anybody know what this was? If you can't see anything to the left, what do you need to do? Because this reacted almost to the pip too as well. Okay, we need to go on a higher time frame. All right, let's go on the weekly. Well, on the weekly, it doesn't make sense except we see rejection, rejection. Here's another candle close. Well, it makes sense on the weekly. And if we go to the monthly, boom, we switch out to the monthly line chart. We put this at the top of that A. We come back down here. Now we have a V, and boom. Why was this an important area? Because this created this new high, right? This was that COVID breakout we saw earlier, all right? Did this come to a random spot here? Did this wick come to a random spot in the market?
No.
So let's see where it came to. Here. And there's the candle under. It would probably sit better on a lower time frame. And there it is. And this, you see how quickly that it opened with a gap and just flew up. When the market opened this week, it flew to the upside. They got their money and they were gone. All this stuff is like just so manipulated. Okay.
Right.
It's very, very manipulated. Let's see where we stopped. Okay, now this one. Let's go down to the daily. Doesn't look clear on the daily, right? So let's go to weekly. What do you see? What happened here?
Break a structure retest.
What is this? What is this right here?
Looks like a small order block.
Institutional candle.
What would it look like if I switched it to a line chart?
It would be a V.
The
So let's switch to the line chart, see if y'all can see. And you have, so you had resistance, support, resistance, support, support. Okay. We're playing connect the dots here. So when this came out in the future, you having an aha moment there? Trust me, I did too. And let's just say we did this. Okay, price broke. Everybody's looking to buy where? Because we broke. Everybody's looking to buy right here. Everybody's looking to buy. What do we have under here? What is it?
breaker block.
That's
Breaker
a break.
block.
It's a break block. Okay, smart money likes to grab liquidity before it goes its intended direction. Added to the breaker block, order block. It did not break structure probably. Nope, it did not. And there we go. All right, so up here, price didn't break. See that? Gave us a flag. But here, when it broke this, right here, this became support. You had a V and an A. And that's your breaker structure right there to let me know that I'm probably going to get a bounce to go higher. And there we are. So right here, if you look at this on the line chart, you see a V, an A retest of this. And boom. See how clean the line chart makes everything? Let's look at it on the daily. And y'all remember we were talking about this channel. I think this is the one where we caught those buys that everybody was selling. I'll have to switch to my candles and then I'll know. Okay, look at this right here. Here's a zone that was broken. Oh. See how the line chart cleaned that up? So as you know, we had Quasimodo here. Had a shoulder, a head, breaker structure, compression, which lets me know since it's compressing down that 9 out of 10, we're going to get a break to the upside. But where's it going to happen? This caused all this to the wick and boom. And this is on the daily, guys. This is US 30 on the daily. You're getting wick entries off the daily. I can't make it any plainer than that. Okay. When you can start using your eyes to get wick entries off the daily, that's telling you this is what higher time frame is doing. You're not having to even go to the 1 minute to understand what this market is doing. You're seeing it on a higher time frame. Do I go to the 1 minute for entries? Do. Why? Because I call signals. And even though like I would take this on my own, I don't want to put other people's money at risk. So I always wait for a confirmation. I would rather give you a bigger stop loss and a win than to give you a loss right off the bat. Because again, this is something new I've been studying and learning, but the people I study from are getting these wick entries like here, 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 taking these trades every day just off these wicks of learning like this. Okay. All right, let's go through some more. Take these off since I just drew them on here. But like right before we started, like 30 minutes before we started, I just came and switched to my line chart and I started marking up random zones. And I said, let me see if they can identify this. This is the easiest way. I think I can make it like stick for y'all. Let's see where that one. This one was just a break structure on the higher time frame that came back and hit it and bounced. We already covered that one. I drew earlier on the smaller time frame. Let me find them. I know I got them on here somewhere for y'all. But are these examples making sense to you guys? All right, there's one. Let's see. Time frame, line chart. So like here's one that I would have been looking for when it bounced back in to get in, like right here. All right, that's the liquidity grab that came down to here. So this came down to here. So you had support, came here to grab the liquidity here. But when it came back inside support, now we have this would have been an entry for here. That makes sense to everybody?
Yes.
All right.
Yes.
So let's look at it on candles. Do that wick entry. I mean, you can't get any plainer than that. And that's just from connecting the dots here. Should turn on magnet, but no. And this right here, of course, was your order block. It broke, came back down into here, and you're on the weekly. If you bring it down to the daily, you could probably get it a little bit closer, and also to the 4 hour. Because you're going to do this on every time frame. You're not going to do it. All of this can be applied to any time frame. Okay. Like sometimes, like some of y'all probably saw where I called that signal when I was in my car. And I had to share the screen for my MT4 on my phone, and y'all probably went to my phone and saw these little line charts and this little trend line where it was showing where it had broken. I was like, hey, I got in this trade here. Here's my stop loss. Here's my entry. And some of y'all took that GJ trade with me, and it shot up 4 hour real quick the other day. Because once you start seeing this, if you're not at your computer, but you know, if you're looking for a buy or a sell, you can look at this. And you know, you have line charts on your MT4 on your phone. Like here's one, like here's all these zones that keep rejecting. Here, before this finally broke out, look at all those rejections. Why did this one break? Because it was coming here. Too easy. Liquidity grab, going down. Boom. Okay, so it doesn't have anything to do with people, oh, you're using trend lines. No, it doesn't. We're looking at support and resistance. Okay. Daniel, trust me, it takes a lot of training your eyes on this stuff. First time I saw it, I was like, ain't no way I'll ever get that. But guess what? I did. Now if I take this to this wick here. Here, there'd been an entry. Here, you're gonna have a V on a lower time frame. Also, you got your overlap right here. See right here. See, I hate when I take my eyes away for a second, then I lose where I was. Look at that. Retest. Okay. So does anybody have any questions on any of this? We've been going for like an hour, so I'm going to just like mark up a random chart. Well, Daniel, I do have an answer for you. I had it on one of these examples. I'm going to show y'all. Look for the V that caused the breaker structure or the A that caused the breaker structure. It's just like some of you that are in the academy, what do we look for in a high probability order block? What's the test for a high probability order block?
Breaker structure, took out a
Imbalance.
previous order block, and then imbalance, yeah.
right? And it's the same thing with the A's and V's. Did it break structure? Did it take out an opposing supply or demand zone? Like in order blocks, we say, did it take out an opposing order block? Here, did it take out an opposing zone? And so like this took out an opposing zone. Where was the opposing zone it took out? Here it is right here. Because a lot of times we see with the smart money, it doesn't always come back to the order block or to fill in the imbalance. All right, you get it now? Good, good. So you can start looking for entries when it comes to that zone that was broken. Because remember, big money is supply and demand. They're not looking, they're not sitting here going down to the 1 minute looking for imbalance or order blocks or any of that stuff. They're looking at the price, like, is it overpriced? Is it underpriced? They're not out here marking up charts. They're buying and selling based off the price of something. Am I getting it at a good value? That the stuff that we're doing to get these little tight entries, they're not doing that. So that's why knowing your key level is more important than getting a sniper entry. What if you get a sniper entry in the wrong direction? Whoop-de-doo. You got a 2 pip stop loss, trade only went 5 pips. I would rather have a 10 pip stop loss than the trade went 100 pips. And or I'd rather have a 10 pip stop loss and I didn't get stopped out and the market didn't reverse on me. Knowing where you are in the market, if you get a bad entry and you're not psychologically in check, because a lot of people get a bad entry and they hold the trade and let it blow their account. At least if you get a bad entry in the right direction, you're going to come out alive. You get a bad entry in the wrong direction, you're going to blow your account because maybe you're not psychologically strong enough yet to start closing the trades. And people will start talking off at the end, I'm sure, when I start talking about psychology, but until you get your psychology right, you're not going to make money consistently in this market. Like so many people, I'll win 9 or 10 trades, but then I'll have one trade take it all back. I've done that. I can speak from experience. I've won all week and then give it back in one day or in one trade because psychologically, I didn't pull the trigger to close the trade. I pulled the trigger to get in, but I didn't use the stop loss to get out or close it when it invalidated. When your trade invalidates, get out of the trade. You can make it back. Okay. All it takes is a good 2R, 3R to invalidate one loss if you're using proper risk management. All right, so let's mark up a chart. Let's just mark up gold. Yes, best loser wins. That's my favorite book. All right. I had 34 drawings on there. I don't like a lot on my charts. If you see a lot on my charts, it's because I'm teaching or calling signals and I want people to understand where they are in the market. I know I always give constant updates to everybody when I'm giving the signals, but I want y'all to be inside my head and see why I'm doing what I'm doing, why I'm holding the trade. Like so many people like, oh, I got scared and I got out of the trade and it went 2,000 pips. Like I tried to tell y'all, it was just accumulating. It had not been invalidated yet. You have to have your conviction to get in the market. You have to have your conviction to get out of the market. Okay. So now remember, gold, it's also not a Forex pair. It's metal. But if you trade supply and demand, gold respects supply and demand better than anything out there. That's why you see a lot of people love to trade gold. And it will give you some good moves. Okay. So if I were just to look at this, what would you mark here on the monthly? What would you mark as your key levels on the monthly? Just looking at this, y'all can mark on the screen.
Wait,
The
sorry,
line.
key levels, or are we doing like marking up a chart from the scratch, right?
Yeah, the only thing I'm worried about on my monthly is where my high and low is that I should focus on.
Okay.
So I'm going to go to this V. Somebody drew here on the green. That's a really good level. Take these off real quick. Yep. So let's just do this. Here was a V, and here was the A that got broken. Okay. So that got broken. Now here, price didn't come all the way back down. Did it come to the wick? Came to the wick, guys. All the way to the wick.
Same.
Crazy, right? They don't want to, they trapped, who did they trap here? You got all these sellers trapped here. You see how the market sold off aggressively here, then snap back up? They got people trapped here. They don't want to come back and let them out all the time. Okay. They come back down into here. These sellers that they trapped can close their positions, and that takes liquidity out of the market. If you got trapped sellers here, that's liquidity for them to buy. That makes sense?
Indeed.
Daniel, and the signals, when I say secure your trade, yes, you definitely want to take some partials and move your stop loss up. So the way that I trade, I use the trade assist, and it will open, just say that I want to trade open 1%. It'll open 0.5 on a trade, 0.30 on a trade. Jesus, I can't write. And 0.20. Let me try that again. I'll open 1%. I told y'all my grandkids switched out my mouse and it's killing me. My first position is 0.5. I'm going to close it at TP1 or 1R. My next position is 0.30. I'm going to close it out at TP2 or 2R. My next position, like a 0.20. This is going to be my runner. I'm going to leave it. I'm going to leave the stop loss for this at the original stop loss until I'm at least 2R, because what happened today on gold and US30, they both retested, then took off. Okay. We got in that gold trade, it broke, and then it came up, but then it gave us 160, 180 pips. And that's why I told y'all, if you hadn't moved into all of your money into break even too soon, you would have got the first 20, 30 pips, but you would have left 160 on the table. Okay. So that's how I manage my trades. So here, of course, on the monthly, we have this high up here. So we can just mark that. So this is all I need on the monthly. I understand that this is order flow on the monthly. Now, for this monthly to keep selling off, I would want it to close below here. But it's too soon to even worry about that. But y'all saw where I had that on here, and I was like, if it breaks below here, I'm gonna be looking for sales. But sometimes I'll just make a mental note to myself that this is something that I need to look for. If this monthly structure holds, then it's going to go higher. If this monthly structure breaks, then I could come down to my next monthly zone. So on my weekly, it stays the same for the high, but now I can mark a new low for my weekly. Where would you guys mark your key level for the low of your weekly? All right, eyes are getting good. You had an A became a V. Why did the market come here? Because your A became a V. So you should have been looking to buy from there. That makes sense. Everybody
Yes.
should have been looking to buy from there. Boom.
Can I ask you a question?
Yes, ma'am.
So the A that became B, can you point it out?
Right here.
Okay.
The sharp points are your major levels. See that?
Mhm.
You have a sharp point, and here is order block. This candle. How's that? It didn't even hit it all the way on the line chart, but bada boom, bada bing. hit it to the pip on that candle though, didn't it? Yeah.
Hi,
This,
Gigi. I got a, sorry, go on.
go ahead.
Hi, Gigi. I got a question that I'm trying to understand the significance of the A and the V. Are you saying that if it's an A, it's gonna eventually turn into a V and that's when you get in?
This is an A. That means it was resistance. The
Okay.
market trades back up and it breaks it. Eventually the market trades back down and uses it as boom.
Okay. Interesting.
But I know a lot of people in the academy that boom, this is how they're getting their entries. I know a lot of people in the academy that are getting their entries there.
Seems a lot easier.
It is.
Okay, thanks for the explanation.
So the
You're
A
welcome.
and B is merely that's just market structure, is what you're
Yes,
saying.
yes, it is.
Okay, okay.
But it's key levels because a sharp A and a sharp B means you had a strong reaction. Big money was in there. I don't focus on these little A's and V's that are sporadically anywhere. I'm looking at the ones that created breaks of structure or support and resistance. So don't go looking for every little single A or V. Look for the ones that cause something. It's just like with the order blocks. You don't trade every single order block. Where is the order block in relationship to where you are in the market? You can't trade every single order block. Every order block's not high quality. Every break of structure isn't high quality. Is it internal structure? Is it external? I'm looking for the ones that cause. Here was major resistance. Here price accumulated. That's your accumulation. It broke it. What did it do? It broke here and it broke here. Boom. When it came back to it, instant reaction. That's why I call it a key level. This is my key level. This is where I'm expecting something to happen. 9 out of 10, if a key level gets broken, it's because there was a lot of news that came in and they were expecting to use that news as a catalyst to break structure and do what it do. Okay. Here, this closed lower on the weekly. So what do y'all think the market will probably do next week since it closed lower? Let's see though. I don't want it to trick me. Let's do this. Right here. And we had those sales today. We took those sales. Boom. This right here, it didn't close lower. So I'm interested to see what it does. I'm not going to sell unless something closes below here. And I'm not going to buy until I get a strong reason to on the lower time frame. Because this did not break.
Mm,
I'm going to wait. We could get a pullback until it keys on, then come break it. But right now, it didn't break through this.
Gigi, may I ask you a question?
Mm-hmm.
I see, the A, that the original A that you had back in where you were before, it came down and formed another pointed A, which changed the direction of the market from a downtrend to an up. But you didn't mark that as a key area. Why is that? Like,
Side by
right?
side. They were side by side, right?
Yeah, yes.
I only have to mark it once. Right here. It's side by side. You're talking
Yeah,
about
but
here?
no, down. You see the A at the bottom? If you put it in a line, there's an A right there.
You need to mark on the chart.
Okay,
Up to the weekly.
right. Okay. I think I just lost it. That's not where I was. Maybe I was right here. No, right there.
We haven't gotten past this yet. I'm not worried about that until I come down there.
Yeah, but it was down. It was where you, okay. All right, thank
were
you.
you saying on the
Do
other
you see-
time frame?
Yeah, is it another time frame?
No, it was the one where you said, look at this, is where it was rejected at the top. It was an A, and then you went over and it was a V because there was a change in the direction of the market. So I noticed that there was an A that you had an upward trend, then it sharply turned down, and then it went shot straight up. But I was just wondering why that wouldn't be a key zone. That's all. Like right
Here?
here.
And then Gigi turn it into the candles because I think once you switch to the line.
Right there. Oh, shoot.
Market.
I'm trying. I don't know if I.
Let me see if I can help you here.
Is that right there? And that is not, I scribbled there, but is that, let's see the sharp A right there? Move over, right there.
Hold on. Are you talking about right here?
Yes, right there where the little green mark is, yes.
Although we're not trading down there yet. We're way up here. It would take a couple months to get down there. So I'm not focused on that. I'm focused on where we are currently in the market. This is the last level that was broken here. And then this level was broken here.
Okay.
You see, this happened in February. And now we're all the way in June. This would take months unless something crazy happened like COVID or like when Russia attacked Ukraine and the gold went crazy and did move like this. But this right here was all the way back in October of last year. That's like way off. We would have to break through here and through here before I would even consider this as being as a level of support. You don't want to put too much on your chart. That's why we call it naked trading. You don't want too much on your chart because, like I explain to traders all the time, subliminally, like if you're going to use indicators for entry confirmation, you don't want them on your chart when you're marking up, because in the back of your mind, whether you know it or not, your eyes are focused on what those indicators are telling you. You need to mark your chart up and then look at things like that. So I'm not focused about this because I don't want to be in the back of my mind, oh, this is going to come all the way down to here. I want to focus on where is my next roadblock? Where's my next area of resistance or support? And then I don't care what happens until I get here and see if it's going to go that way or that way. If it breaks this one, then I'll focus on, well, where's the next one? That makes sense?
Really appreciate that part, Gigi, because that's been my thing, wanting to hold on to a trade because I see the main, like a bigger target. But what you're saying is just to be modest about things and let it come to the very next zone, and then you can worry about the next one.
Yes, you're going to need a reaction. Remember, we should be reactionary traders. We react to what they're doing. We can't predict. We can forecast and we can assume, but we don't know what they're going to do when they get here until they do it. So that's why we mark the key level. And then when they get here, we let them tell us what they're going to do. Like here, where this broke this and it was coming back down, I would be like, they're probably going to retest this because this was responsible for breaking this. Okay. And then I would just look for it, confirmation on the lower time frame. You can get the exact same thing on the lower time frame, a break and a break, come back here, then boom. We should react to whatever they do. Whatever they do on the bigger time frame, when they respect this level on the bigger time frame, then we can scoop down to the lower time frame and look for a reason to buy. That makes sense?
Yes.
So you see here how this closed on the daily, weekly. It's a wick down here. When we go over to the daily, this is that level that took out this level. So that's why this is a key level on the daily. So I shouldn't assume what they're going to do here. I need to wait when the market opens next week and see and give me a reason to buy or sell. Now, the fact that they took out this makes me think maybe they could sell a little bit more, but the daily is a pretty strong level. Something like this, I would need to see a good close above a higher like here, to feel convicted to go long. Because of where they stopped, I want to see what they're going to do next. They stopped in a very complex area that this price could go either way. I start looking. And then I'm like, did they break structure, any major structure anywhere? They broke the daily. So y'all know the rules. If a 1 hour gets broken, 1 hour gets broken,
Oh, it's
I
the
look,
4 hour.
I go to my 4 hour for my POI for where I'm gonna take profit. If my 4 hour gets broken, I'm gonna take profit at my daily. If my daily gets broken, I'm gonna look to take most of my profits at my weekly. My weekly gets broken, I'm gonna look to take my profits on my monthly. Let's see if I can write. So here, once this daily broke, y'all see what happened? It came down to the weekly. So when this daily broke, if you're looking to swing trade, you could have held it down to your weekly level like we just found. Any buys were short term. Y'all see those buys were short term. Because daily structure had broken, I'm looking to trade to a weekly POI. And if you can't see on here where daily structure broke, again, your line chart, somebody showed me on the line chart where it gave you that clean break. Anybody else?
I can see that.
Charlicia got it up there. All right, so look at this. We're looking for what letters of the alphabet? We're looking for A, and we're looking for V. Where did we get an AV combination? Yes, Daniel is correct.
Okay, Daniel.
Daniel said he gonna remember his alphabet. You know why I love
Show me
this?
Which one? Cause
Yeah.
I can't see what his name was. You said Daniel, but I didn't get to make out that name. Where did he mark?
I like AV because my mother's name was Annie Vane, AV. I used to call it AV. Here. You had a V and then an A. You could have played this all the way down.
Wow.
Also, what is this?
Double top, 2 A's.
Yeah.
Let's see. I cannot draw.
Oh, head and shoulder.
Quasimodo.
Quasimodo.
Because here, this made a lower low than this. Sense?
Yes.
See there? What do y'all see happening here? What is an A? Is an A support or resistance? And an A, and a V, and a V. See that? Okay, switch to candles. Look at that. Wicks. So you could have kept shorting the market to go down. That makes sense. Now, when you get on your lower time frame and you're looking for your entries, now look for your order blocks, look for your imbalance, look for your break of structure and change of character. But if you don't know where you are on the higher time frame, that'd be like crossing the road without knowing which way traffic is coming, right? This is why I tell everybody, don't go against the higher time frame. If you don't know what the higher time frame is doing, if you don't know which way traffic is coming, you shouldn't be entering traffic, right? If you pull out from a crossroad without looking both ways, what's going to happen?
Boom.
You're more than likely going to get hit, correct? So jumping in the market without knowing your directional bias is like pulling blindly into oncoming traffic. So that's why I look at my daily to determine if I'm looking for a buy or a sell and where I expect it to sell to. Like here, when this sold, I've been looking for it to break this next low. Once it broke this next low, when I look left, where's my next V? There's my next V. Okay, here, now I got this caused the break of structure. Got some liquidity up here because this is where my break of structure happened. But now this, I know this closed below because you see this closed below this. So I know my body, because I have this below this, I know my candle body actually closed lower here. So I'm looking for once it pulls back up, I got a notch here and a V there. I'm looking for it to come somewhere up in here. Probably have some liquidity on the lower time frame we could look at. But it came up there, traded down, now we're here. A lot of consolidation happened. I think this one here was the buy that we were in. It was accumulating like for 24 hours, and it finally shot up. But now I was like, this is a short-term buy. And a lot of people were like, oh God, it consolidated all day and all night, and I got out. And then when I did, it went up 300 pips because we were looking for it to just come retest this to continue going down. So knowing these levels, you know, if you take the buy, that it should be short term because this had broken and you're just looking to buy it back up. That one over 300 pips. And those are the things you look at for your key levels. Where did structure break? If structure break, where's my next key level? And now looking left, just looking at this should tell you why it accumulated here so long, because it was look at what it had to break through. The reason it was accumulating for so long is because of this right here. What was responsible for taking out this huge candle? This huge candle got taken out and it kept market up and it accumulated and accumulated. If it breaks here, I'm going to go for who had enough money to take this out. Here's the money right here. Took this out. That makes sense?
Yes.
Yeah, so this key level here, that's where we would expect for it to be bought back up to the upside, right?
If you
Once
had got in a buy today, you would have automatically went in profit. Like I literally sat there and I was like, God, I should just buy off this level. And I told him in the signals chat, I was like, man, I regret not buying, but I was anticipating the sell back down. And so we got into sales today. And sold down, bought back up, then it sold down. We caught this right here off the 1 minute chart after the news. Because remember, news is just for manipulation. Yeah. We entered off this candle here. Like when it broke, I was like, yep, there's a QM right there. So we took this trade today. It's right here. And I know some people held it to the end of the day. Right here. We had our stop loss right above it. I was like, God, it came close. But we made money. And then when it finally broke, retested. So you could have snagged another entry because you got a V and an A. All right, so here, got an A. And if I can get this right here. This break structure. There's your money shot right there. I got in early because I just wanted to get in at the top because I was anticipating it to happen. Look at that. Stop loss was right above this. And it came here. Could have got another entry. Once this broke, the floor became the ceiling. Got another entry right here off this one. And this looks like Quasimodo right here, because on a Quasimodo, you got one shoulder that's higher than the other, like Hunchback of Notre Dame. Then this broke, could have got in here. You would have had a bigger stop loss unless you took it like over the base candle here. Breaker block. A tighter entry here. All right, anybody got any questions? We've been going an hour and a half. But that's how I mark up charts and that's how I get my bias based on those key levels and those key zones. Okay. So when I caught this, because of what it had done on the higher time frame, is why I was expecting it to come back down and retest. Okay. Projected here off this.
Excuse me. Daniel was asking, when is an AV combo invalidated or mitigated?
An AV combo is simply support became resistance or resistance became support. That's just the breaker structure. You use the same rules for invalidation as you do. Like if you're in a buy and your low gets broken, it's invalidated. If you're in a sell and your high gets broken, it's invalidated.
Makes sense.
So let's just say just have an order block here. And the market came.
For the what?
For the film that I'm working on.
Okay.
Okay, so if I had an order block here and the market came and took it out, and I'm trading based off of this, traded away and came back and I got in here. If this comes and it doesn't break structure, and it comes back down into here, if you're not at break even, if you left your stop loss here, if it takes this out, you're invalidated. This is what we're trading off of, so it's invalidated. I'm trading off this order block, or this was a V that caused a break of structure. Once that is invalidated, remember that A and V is just a point of structure. You got V and you got an A. If this V gets broken, it's no longer buying. This A gets broken, it's no longer selling. Too easy. Right? Anybody else? So do you guys feel like you learned anything tonight?
Oh, yes.
I learned something new with the A and B. I appreciate it.
Appreciate it.
Good stuff.
I do.
Yes, thank you.
Well, how many of
Did you-
y'all are still having problems with your mindset? Yes, Sandra, what's your question?
Yes.
I was just gonna ask you, will you be posting this? Are you gonna be posting this on YouTube or?
It's already live on YouTube.
Okay,
And I'm glad, because since I forgot to hit record at the beginning, which we didn't miss too much.
okay.
I'm gonna tell you guys now, the biggest mistake of my trading career is that I didn't know anything about mindset when I started. I didn't know anything about risk management when I started. You know, I'll never bash the MLMs, because if it wasn't for the MLMs, I would have never learned. Well, I probably would have. Let me tell y'all my story. I was in Afghanistan working, and I wanted to learn how to trade, and I read something about Forex, had never heard of the MLM, and I posted on my Facebook page, hey, I want to learn to trade Forex. Anybody know any online classes I can take? And somebody was like, yeah, my fiance, she teaches people to trade. She can enroll you in this academy. It's only like $179 a month, $149 a month, something like that. And I got on the call, and they showed me that they could teach me how to learn how to trade. And that was all she wrote. I was getting on a plane to Afghanistan like 3 days later. And I was like, okay, I got a choice. I had said, I'm going to pay all my bills up for a couple months, blah, 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 blah. But then I was like, no, I'm going to take this money and I'm going to join this educational platform. And I was so excited. I had never built a team, didn't know nothing about team building, but I was just so excited. I'm like, oh my God, everybody knows I love money and love to make money. Okay. So I was going back overseas. I was making 6 figures overseas tax free, but you know, we were getting bombed, we were getting shot at, and I was having to use the same bathroom as people in other countries who are squatters and were leaving stuff on the floor. And I was having to walk in it, like literally, like the living conditions were crap. And I'm like, I don't want to do this the rest of my life. I need another way to make 6 figures. So I started looking to investing. But I just started telling everybody, oh my God, I've signed up to learn how to trade. I'm gonna make money. Next thing you know, I was like a P2000. I was making $2,000 a month just because I was serious about learning how to trade. I didn't know how to do no opportunity calls. And they're like, how are you ranking up? You don't even do opportunity calls. I'm like, because I want to make money. And I want other people to learn how to make money. I grew up in one of the poorest places in America, and everybody I know is broke, and everybody needs to learn how to invest, because all they taught us how to do was crop tobacco, hang sheetrock, and work in factories. And everybody I know has had to work themselves to death until they were old, broke, and broken. And I'm like, if I can learn how to be a Wall Street trader from the comfort of my own home and make 6 figures, I don't care how long it takes me, I'm going to learn. And, you know, they say you can't teach an old dog new tricks. I was 50 years old. And, you know, you have all these young girls half naked twerking to teach you how to trade Forex. You got all these young guys driving Lamborghinis and Ferraris. People were sleeping on an old grandma. Like, they're out here, they want to follow the people with the Lamborghinis. They want to follow the girls that are half naked. Nobody wants to see my old ass. So they were sleeping on me. I'm over here sitting here learning how to trade. Meanwhile, everybody else over there trying to rank up. When all of that fell to pieces, guess what? The same ones that had ranked up now, they can't trade. They can twerk, but they can't trade. So everybody was over there following all these people because everybody likes shiny things. Everybody likes sexy girls. Everybody likes fast cars. And while they were over there following the bling bling and the ding ding and all that other stuff, I'm over here learning how to trade. They were here now. They still can't trade. Now they run into me to learn how to trade. So The one thing I can say about Forex, Forex doesn't care how old you are. Forex ain't gonna say, look, you're too old to trade, you're too young to trade. Forex ain't gonna say, you're the wrong race. Forex ain't gonna say, well, you don't have a degree. Forex ain't gonna say, well, your credit's bad. Forex ain't even gonna say, well, you in prison, because I know people in prison that was getting funded. Okay. So whatever excuse you got, that's your excuse. It ain't mine. If y'all want to sit here and not learn how to trade, that's on y'all all day long. If y'all would rather twerk and all this other stuff and get naked and walk around with y'all following those girls with those thong pictures, she can't teach you how to, she'll teach you how to clap, but she can't clap these trades. That's all I'm saying. Sometimes you just got to hear the truth. When you get
Miss
serious
Gigi.
about Forex, yes,
Oh, sorry. Go ahead. I'm sorry. Go ahead.
you got to get serious about Forex, guys. Forex, the only thing stopping you from being successful with Forex is you. I was not going to let anybody or anything. You know how many people, I was sitting in a car where somebody was like, well, you know, Gigi's the better trader, but so-and-so, she's young and she's pretty. If we get her on the team, and I'm like, did it? Like, I almost used the bad word just now. I'm like, did these, not, no, I'm sitting in the back seat of this car right now. They're picking this chick over me because she's young and pretty, but her ass can't trade. Like, seriously, you got people out there that can't trade, driving Lamborghinis and everything else off of their courses or off of their broker deals or their prop firm deals, but I bet you they ain't calling those signals. They're sitting here pulling $250,000 in residuals and affiliate pay. And if they lose it, they don't show it. They flip it, they show it. Like all these cars and stuff, they ain't being bought off of Forex profits. Now, I'll put it like this. I'm not hating. If you can take Forex and make it a business and make 6 and 7 figures, I applaud you. That's what business is all about. But don't lie and say that's how you get your car or your house or all this other stuff. Let people know I turned Forex into a business. Now, you can take, I've seen people take $2,000 to $1 million. You can do it. You can really, really, really do it. But you're going to have to work at it. And thank God for prop firms, because they're like, when we went to the FX Summit, there are these young guys up there in their 20s making $300,000, $400,000, $500,000 a year trading for prop firms. So if you're going to work for 20 years for a company that's going to pay you $40,000 for the next 20 years, how much money are you going to make? $40,000 a year for the next 20 years. How much money are you going to make? Somebody just let me know. So if you can give a company 20 years to make that amount of money, why can't you be serious about Forex for 4 or 5 years? So 20 years, you're going to make 800K. 20 years of your life, you're going to give to another man or another woman to make $800,000. But you can't give 3 to 5 years to Forex to be able to make $800,000 in a year. I mean, just think of your odds. Would you rather work 20 years to make 800,000 or study 3 to 5 to make 800,000 in a year? You can come back if you dedicate yourself to Forex. Forex is an attention whore, guys. If you've ever dated a chick that is an attention whore, that wants all your attention, she gets on your nerves, she wants you sitting up in her face, breathing down her neck. Forex is that attention whore. Forex wants you to spend time with her every day. Forex wants you to sit down and read these charts. I don't care how many times I chart in front of you. If you don't do this for yourself, you're not going to get it. I love the fact that y'all get on these sessions and learn with me. But I don't care how much you see me chart. If you don't chart, you're just not going to get it. Unless you're just a person with like a photographic memory. Money Coach is over here texting me, laughing at me. I love me some Money Coach. But y'all listen. You got to sacrifice. Anything in life is a sacrifice. It really is. And I'll tell you, if somebody had given me these mindset talks and these risk management talks 3 years ago, my life would be a lot different. I had to learn this stuff the hard way. You know, somebody was saying the other day in another group, they said, the thing I love about our mentors, he teaches us to learn from his mistakes. I said, you're not going to learn from somebody else's mistakes. How many times haven't your parents tried to tell you something and you didn't listen and you did it anyway, and you had to learn from your own mistakes? How many times have you told a child the stove's hot, don't touch it? The only way they figured out not to touch it is when they finally touched it and got burned. So a lot of this stuff, I don't care how much I say it to you, you're still going to make these mistakes. But once you make the mistake, don't keep making the mistake. I still do it sometimes. Impatience, if you are impatient, it's like I tell everybody in my academy, you have to identify what it is that's wrong with you in real life to get that to translate over to Forex. If you're a risk taker, if you're a gambler in real life, you're going to take too much risk and you're going to gamble in Forex. If you hold on to toxic relationships with people, places, or things, like if you're a person that gets in a relationship with somebody and you don't break up with them when you know good and well that you need to, you're going to hold on to that bad trade and you're going to let it eat up your account. If you're lazy and unorganized in real life, you're going to be lazy and unorganized when it comes to your Forex trading. You have to fixing your mindset in Forex doesn't really have to do with Forex. It has to do with who are you as a person. Forex will show you who you really are. You know, people say money doesn't change you. It shows you who you really are. Forex has changed me for the better because things that I really needed to fix in my real life, once I fixed them, it helped me be a better trader and it helped me be a better person. So you need to sit down and identify what is it about me in my everyday life that is translating to me losing these trades in Forex. And I'll tell you, the number one thing with me that was causing me to lose money is I was always good at everything I did, and I was not used to losing. I was not used to being wrong. When I tell you that Forex is always right, the market is always right, and you are always wrong. The market is right. Sometimes we get it right and we ride alongside the market, but whatever happens, the market ain't taking your money. You're giving your money to the market. So I had to understand that I am not going to always be right. And so when I'm wrong and my trade is invalidated, I needed to close it. I would sit there and wait, but wait, I marked this up. I did that. It came to this zone. I know this trade's going to turn around. I just know this trade's going to turn around because I marked it up. And this is what I said it was going to do. So I know this trade's going to turn around. Win 9 or 10 trades, be up 200, 300%. Give it back on one trade. Why? Because I thought I had to always be right. Jamal said he's experiencing that now. That was my biggest thing. Like everything in life that I always did, I was the head of the class. When I went to school to be a court stenographer, I was in there 9 months and had surpassed people who had been there 2 or 3 years. When I started band and playing music, I went around people who had been there for years. When I started typing class and I was at 55 words a minute, other people were at 5, 10, 15 words a minute. Like everything that I had ever done in life, I had excelled at it. So to come from feeling like I got this to getting your ass handed to you and being wrong time after time after time, it will humble you. This market will humble you and break you down. And when you get to the point where you realize, I'm going to be wrong. What if I just practice risk management? What if when I'm wrong, I close out at 1% instead of letting it take 5% or 10% or 20% or blowing my freaking account? So you have to humble yourself. You have to realize that you are going to take losses. Andrew, I know all about that. Andrew said he had a girlfriend humble him, break him down like the market. Yes, it will. That's why I'm telling you, if you can't end bad relationships with people, you're going to be holding on to bad trades that are going to blow your account. Just like you don't let people blow your account, don't let the market blow your account. Take the loss. So like, and this will be the last thing I cover, just learn to accept the fact that, and I do this a lot. Let's just say you took 10 trades this week. Okay. 1%. Losers over here and winners over here. Okay, each trade was at 5%. Each trade was at 1%. I lost 5 and I won 5. How did I end up this week? And this is,
Broke even?
let's just say we're at a 1-to-1 ratio. I woke up break even. Am I a successful trader at this point?
Yes.
Yes.
Yes, you are, because you did not blow your account. You did not give your money back. Your number one job is to protect the money you have. So if I took 10 trades, I lost 5 and I won 5, I'm at break even. Okay. Now let's just say that I upped it. I've become better as a trader. And now I'm getting 1 to 2. So I lost 5, I'm down 5%, but I won 5. I'm up 10% on my winners. I'm down 5% on my losers. How did I end my week?
Profit.
Up 5%. So if you're a person that half the time you're wrong, you only need a 1 to 2 average to end up in profit. But let's just say I lost 6 and I won 4. So I'm down 6%, but I'm up 8%. I still made 2% for the week. Now with the 1 to 2 R, I can lose 60% of my trades. That's the way you should be looking at the market. You shouldn't be looking at how much money you made. You should be looking at what is my ROI at the end of the week. Now, let's say I get real good, like real good. So, well, Gigi, what is your perception of real good? Well, there's a guy on FTMO that he won 38% and he lost 62%. How much money did he make that month? Do y'all remember? He lost 68%. He lost, I did this backwards. Y'all let me do this wrong. Let me tell y'all the truth here. Let me get the truth up here. He lost 68%. See, I still can't get my lies straight. He lost 62%. I watched his interview and he won 38%. Do y'all remember how much money he made on his payout?
400K, right?
He had a 400K account. Okay. So he had a 400K. He had 200K. His payout was $692,000. That was his payout. He was only right 38% of the time, but he walked away with 692,000. But there was a guy that came after him that had like a 1.5 million payout for the month. I can't remember what his win ratios were. But guys, if you think you have to be right all the time, now you think about that 800,000 a year. If you went to work and 38% of the time you screwed up, would you have a job pretty soon? If you're on the job screwing up, look, y'all keep letting me do this backwards. This is how I know I've been on here too long. Let's do this. We're going to do this the right way. If you go to work and you screw up 62% of the time, are you going to have a job? Even 38, they're probably not going to have a job. You go to work and 62% of the time you're making errors and mistakes, they're going to send you home. Sure ain't going to pay you $800,000. This guy screwed up 62% of his trades, but he walked away with a whopping $692,000. Not in a year, not in 20 years, but in 30 days. I'll take those odds any day of the week. So if I can screw up and lose 62% of my trades and make over $500,000 in a month because I followed risk management and I followed trade management and somebody gave me a funded account, am I going to do it? Like, we literally just met people who have been trading funded accounts for over a year. So don't tell me you can't do it. Don't tell me you can't do it. We got people over here getting funded left and right. Once you get funded, how much money do you want? Like, once you get funded, how much money do you want a day? All right, so let's look at this realistically. And Chelsea and I were talking about this. If you got a 200K account, how much money a day? You got 20 trading days. You got 20 days to make money. If I give you 1% a day off of 200,000, how much is that?
2,000.
You got $2,000. Average person might make that 1 or 2 weeks on their job. You just made it in a day. So why you come here trying to make 10% in a day and blow your account? You got 20 trading days to aim for 1% a day. If you only get 1% 10 times this month, you got $20,000. Now you got somebody's annual salary in a month trading somebody else's money. And you only work 10 days to get it. Again, why are you trying to make 10% in a day? Being an owner of a prop firm, I can tell you that this right here is why most people lose their funded accounts. Many of y'all be like, oh, I'm gonna run it up. I'm gonna run it up. I'm gonna run it up, boy. I'm about to run this up. Why? Why you gonna run it up? You gonna blow it up. That's what you're gonna do. Everybody be talking about, oh, I'm funded. I'm gonna run it up. I'm gonna get me a lick on this 200K. You'll get a lick, all right. A lick that daily profit loss. How do I know? Oh, wait, I know how I know. Gigi made $33,000 one day and she was on the leaderboard. And then when she lost a little bit of money, she felt like she needed to get back on the leaderboard. She blew her account that day. What? Gigi did that? Yeah. The market showed Gigi who was boss. Screw that leaderboard. Give me my $2,000 a day. I mean, did it feel good to be up there? Yeah, it felt good. It felt real good to screenshot that shit. Look at Gigi's name on the leaderboard on FTML, boy. She gonna run it up. I ran it down. Emphasis on down. Like, y'all know I'm as real as it gets. I'm gonna tell y'all the truth. I ain't gonna be out here lying. These other people that's out here, they do the same stuff. They just ain't gonna tell y'all. People out here flossing off money they made other ways. But anyway, I told y'all I'm not hating because I'm gonna make me some money like that too. I'm learning from them. If I can take Forex and turn it into a business and other ways to make money, why would I not? That's another thing they covered at the FX Summit. People who took they're like ways to invest the money that you make from Forex. Don't leave it sitting in your yeah, it's not just ego. They're so worried about what people think about them. I could care less what people think about me. I'm sitting at home right now in a pair of Walmart stretch pants and a Forex and Chill t-shirt. I washed my hair and let it go. Ain't got on no makeup. I could care less about impressions of people. My bills are paid. My family's taken care of. I can sleep good at night. I'm paying my tithes in church. I'm good. I'm helping other people get funded. Some days there's people on the team making more money than me. Not every day, but some days. So, and that's what it's all about. Like, if I am successful, that's one thing. But if people from the academy are successful, that's everything. Stephanie, my daughter, made this strawberry lemonade. And it's so good. She put real strawberries in it for me. Everybody knows I love strawberry lemonade. But I just wanted to talk to y'all. I always like to talk about mindset because a lot of you are probably hard on yourself. I hired a mindset coach once I figured out, like, I'm sitting here like, why am I such a good trader, but I don't have the profits to show for it? I hired a professional. I'm not crazy, but there's things about me that I need to fix to where I become a better trader. And if you want to do this long term, what do people who are in professional sports do? They get a coach. Everybody who is the best at what they do, they got a coach. They got a mentor. My mentor has a mentor. If you want to be the best at what you do, you need somebody who's a step above you. Like whenever I wanted to get to 6 figures, I got me a 6-figure mentor. Whenever I wanted to get to 7 figures, I got me a 7-figure mentor. Like you can learn something from everybody at every level, but when you want to do what somebody else is doing, you need to rank up. You really need to. You need to go to someone who's been there, done that. I started watching interviews of people who 3, 4, 5 years, the market was handing them their ass, but they didn't give up. And I'm like, what is it about them that made them not give up? I don't need their skill set. I know how to trade. But what is it about them that makes them different from me? What is it about them that set them apart? And I would pay for people's course just because I wanted to tap into their mindset. Didn't watch their course, didn't learn anything from their charting, but their mindset and the way they viewed the market, the way they were not afraid of the market. And I noticed, I was like, well, they're young. They don't have children or grandchildren depending on them. They're not afraid to pull the trigger. I was being too safe sometimes. You can be afraid to trade because if you got it in your if you got it in your mind that you need Forex to live, that's a crutch. You're putting pressure on yourself. You didn't need Forex to pay your bills the last 10 years or the last 20 years. You don't need it to pay your bills now. If you come in here with a mindset of need and a mindset of greed, you're screwed as soon as you walk in. As soon as you come in the door with greed or need, you are screwed. Your mindset is already shot. You should come into this with the mindset, you know what? I got a good job. It pays my bills. It takes care of my family. But if I focus on learning how to trade, eventually I can make more money and walk away from that job. Do not focus on, oh man, I can't wait till I can quit my job. You better love that job while it's paying your bills. Your mindset is the biggest hindrance between you being a 6 and 7-figure trader. If you're older and you're already getting like Social Security or retirement, or you already got money in the bank, I wouldn't even care about trying to make 6 figures a month. What would $1,000 or $2,000 a month do for you right now? Like, focus on getting through level 1. Like, if there's any gamers in here, you have to go through levels on those games. Like when I started this out, all I wanted to do was supplement my income because that's what I saw, people making a couple $1,000s a month. But then when I saw people making 100,000 a year, then 100,000 a month, I was like, oh, sky's the limit. Okay, sky's the limit. Yeah, like Pastor Debbie, she don't need $100,000 a month. She's got a home, she's got a car, she's got a retirement. But what would $1,000 or $2,000 a month do for her? It's a nice little nest egg. Yes, couples who make an extra $500 a month, it'll take away the thought of divorce. That's true. Most people are 1 to 2 paychecks away from losing everything they have. An extra $1,000 a month will change your life. So don't put pressure on yourself is what I'm trying to say. You don't need that pressure. Learning how to trade is pressure enough. And another thing that my mindset coach taught me, he said, Gigi, when you lose a trade, he said, how do you feel? And this is when I first started. He said, do you beat yourself up? I said, yep. He said, I bet you call yourself stupid and dumb. I said, yep. He said, if you walked in a room and you heard a man yelling at his wife or a woman yelling at her kid, you're stupid, you're dumb. Why did you do that? He said, what would you call that? I would say toxic and abusive. He said, you are being toxic and abusive to yourself. He said, start looking at it this way. he said, what is the most you're willing to lose on a trade? I said, 1%. He said, so if you take a trade and you lose 1%, do you still consider yourself losing? I said, yes. He said, no. He said, change your mindset, the way you look at that. He said, if you take the trade and you close that trade when it's invalid and you only lost 1%, you won. No longer are you giving your money back. So you won 5 and you won 1% on those 5, then you lose 1 and you lost 1%. You're still up 1%. Like, you didn't lose, you still won. You still won. So if you use proper risk management, and when that trade's invalid and you give that 1% back, you still won. Yes, JL, getting laid off, I've been there, done that. Just think of it as it's giving you time, freedom that you need right now to study, but don't put pressure on yourself to make money, because you're not gonna make money till you study first and you get your mindset right. Use it to work on yourself. Like, use time that you have to look for other means of income so you don't feel the pressure to make money trading. Don't put pressure on yourself. Learning how to trade is a mindset in and of itself. For older traders like myself, it's a rejuvenating mental experience. It keeps me on my mental toes. It sure does. Like, keep your mind active. But like, don't focus on the fact that you got laid off and you need Forex to pay your bills. Focus on the fact that you got laid off. So now you have more time to study and chart and look for another way to make money in the interim while you study and chart. I'm like, there's been times when I was like, man, if something happens, if I have to get out in DoorDash, if I have to get out in Uber, if I have to get out and wait tables, I'm gonna do it, because those are some of the jobs that you can literally make your own schedule. If I want to DoorDash, I'm not going to DoorDash doing New York when I'm trying to trade US 30. Like, things like that. Just think of a job or a remote job that you can work from home. Like, I was working from home, making 6 figures for the government and trading. I got blessed. It was a blessing. But there came a time where the job started conflicting with my profits and I was able to back away from the job. So don't put pressure on yourself and don't put time limits on yourself. Don't say, I got to get this in 6 months. There are people that it took 6 years, but now they have $1 million years. Again, 20 years at your job for 800,000, or 6 years to make $1 million in a year. You've made in a year what you would have made those additional 14 years. You've erased 14 years off of your work life. So don't be in a hurry. Don't be in a hurry. Don't put pressure on yourself. If you need to talk to somebody about mindset, don't talk to somebody who don't trade. Don't talk to somebody who thinks you shouldn't be trading, that you're chasing a crazy dream. Don't talk to people who are going to talk you down and be like, you're crazy. Why are you wasting your time doing that? You can find a job. You got a degree and da-da-da-da-da. Most people with 4-year degrees make $40,000 to $50,000 a year. Meanwhile, we got high school dropouts, people who got out of prison making 6 figures a year trading Forex. People with 2-year degrees are making more money than people with 4-year degrees. People with a 2-year vocational education make more money than people with 4-year degrees. That's just how jacked up our system is. And then they tell you, well, you got to have a degree to get the job. Then you go get the degree. And they're like, well, you got to have 10 years experience or 5 years experience. How am I going to get the experience? You won't give me a job. Like, most of the people are not even making money doing what they went to school for. Okay. So just don't put pressure on yourself. Use the free time to work on yourself and to work on your skill set. Use the free time to improve yourself. That's it from me, y'all. I follow like Tom Hogarth, who wrote The Best Loser Wins, and he trained thousands of traders all over the world. And he used to do 8 days on the charts and 2 days mindset. And he started doing 2 days on the chart and 8 days of mindset. And his people started making more money and more money. and more money. Okay, so definitely work on your mindset. We will post the replay. Unfortunately, the beginning part got cut off, so hopefully everything's saved to YouTube. God bless y'all. I appreciate y'all. Thank you for hanging out again with us. We've been on here 2 hours. Give you part of your life back. If you're new to Forex and Chill, we appreciate you. This is how we're always going to do it. We're just going to be real. We're here to help people make money. We're not here to floss. And God bless you. Have a good night, everybody.
Good night, everybody.
Love you, Gigi.
Hi, thank you,
Love
Gigi.
y'all.
Good
Love
night.
y'all
Thank
like a
you.
fat kid love cake.
Good
Yolanda.
Good night. Thank
Hey,
you so
y'all. Thank
much.
you, Gigi. Have a good night.
Good night.
All right,
Good
love
night,
on y'all.
everyone.
FNC fam.
We see you, Chelsea.
Forex
Good
and Chill
night.
for life.
Can we keep it going for 1 more hour?
Please, I'll stay.
Back in the day, we're going to do some more of those old school Forex and Chill, but I really want to do some in-person events. I
That
really do.
sounds-
Oh, Gigi, we need wrinkles tonight. Remember that. Don't forget.
Yeah, I got you. We got more Rincos coming up for Glenn. Glenn loves the Rincos. You're not the only one.
Them A's and V's are really good for that. It's really clear.
Really?
Yep. Yep. Big time.
The
Yes,
mindset
they
was
are.
really good for me.
Yeah, the mindset's going to make a big difference, Yolanda. Trust me. It made, like, now when I lose a trade, it does not bother me at all. It really doesn't. I'm like, oh well, I got
I
that
have
one
a-
wrong.
Have a lot of negative around me, and I'm trying to get through it anyway. I'm hanging in here.
You'll get it. Just don't be hard on yourself. You're not the first, and you won't be the last.
Thank
All
you.
right. All right.
Thank you.
Thanks. God bless everyone.
God bless you.